It's a slow start to a busy week. That's our topic for today's Backstage Pass. Hey there, everyone. I hope you had a wonderful weekend. Happy Monday. Happy start to a brand new week. Stocks and bonds are up so far this morning. Rates are going to open up about where they closed off on Friday. We'll talk more about that in just a minute. But first, let's talk about the news of the week. There's a lot going on this week. We've got retail sales, we've got CPI, we've got Treasury auctions that are happening this week. We've got the Philly Fed Business Index. A lot of things that are going on this week, but of course, the one thing that everybody has their eye on that the markets are watching, well, that's the CPI, that's the Consumer Price Index. That's going to be released tomorrow. The CPI data is expected to come in lower than what it has been. So for the month of August, year over year, it's expected to fall from 8.5% to 8.1%. And then for the month of August, the reading for the month of August itself is expected to be negative 0.1%. Now, that's what has been forecast. Anything other than what comes in at forecast has the potential to be kind of a big market mover, but right now the markets are expecting for that data to come in as forecast. But hey, that's tomorrow. We have to get through today first. And like I said, it's a little bit of a slow start, but today, the one big news item that we've got is a 10-year Treasury note auction. And the reason why that's important is because for the month of August, the mortgage bonds have been in a downward trend pretty consistently. And there's been a few times where bonds have tried to break through the trend line and just have not been able to. Well, this 10-year note auction could be the thing that helps push it above. If the 10-year note auction is met with a lot of demand, well, that could be the boon that mortgage bonds need to push above that downward trend line. So we are hoping and watching and waiting to see how the 10-year note auction is met, what kind of demand it's met with. But so far this morning, again, like I said, a slow start. Mortgage bonds are up about 6 basis points. That's well off of the highs of the day, about 17 basis points lower than the high, the intraday high. The 10-year yield is down about 1 basis point. The national average for a 30-year fixed ended the week last week on Friday at about 5.97%. We're expecting for it to be about the same today, around that 5.97 to 6%. Now, that's all the news that we have for today. Remember, a little bit of a slow start today, but it's going to be a busy week. Tomorrow, we will bring you all the data that is in the CPI report, and we'll dig into that a little bit and bring some of the data that's kind of deeper into that report out. But until then, remember to stay positive. Have a great Monday. Have a great week, and we'll see you tomorrow.